Hello, you're watching Commodities Corner with me, Thomas Taplin. Today we're looking at the base metals group and examining the recent hike in prices amongst metals such as copper, platinum and iron. Well, joining me in the studio is Commodities Analyst at Commerzbank in Frankfurt, Daniel Briesemann. Daniel, thanks for joining me today. First of all, we've seen surprising price rises in the base metals group of late, such as those in copper and iron ore. Many speculators seem to be extending their newly long status, according to some analysts. Why is this?
It clearly is due to the fact that China appears to have turned its economy around this summer. This can be seen by several really or surprisingly good economic data coming out of China of late, which clearly shows that China is back on track, so to say, and back on track to achieve the 7.5% growth target they set at the beginning of the year. In addition, we also got quite encouraging economic data from the US as well. So, as you know, these two countries are the main or the two biggest metals consuming countries, and this clearly points to a robust demand, and in turn should lead to higher prices, as it already did in the past few weeks.
You mentioned China's recovery there, but it's not all been plain sailing for the world's second biggest economy, has it? In fact, the economy has seen a slowing down of late. Yet if we take iron ore, for example, the price has rocketed up to around $139 a tonne, bamboozling many analysts. Copper even has also made big gains too. So why are we seeing such a price advancement by some of the key commodities residing in the base metals group? Is it just China, or are there other factors?
Let's say it's mainly China, yes, but in addition, and I agree with you, there were also some or increasing speculative interest of late. Here, money managers were positioned very negative for the last couple of months, and this turned, or their mood turned sharply over the last couple of weeks. Now the majority is betting again on higher prices across the board. This clearly helped as well. But besides the speculative aspect, the fundamentals data have clearly improved of late.
Let's take a look at platinum for a moment. There is a viewpoint that platinum is unlikely to maintain rallies above the $1,500 mark. Would you agree with that?
No, definitely not. I strongly disagree with it, and this is mainly due, according to our view, supply problems in South Africa. You might be aware that there will be probably a strike in the gold mining industry due to the wage negotiations, say being stuck, and as I am aware of, pay negotiations in the platinum industry have also recently started, and we think that here another strike can be possible as well. So I wouldn't be surprised to see renewed supply shortfalls in South Africa, and this should heavily influence the global market and should support platinum prices.
Okay, looking ahead, which base metals are going to be the real attractive options for investors if we do start to see a full global recovery take hold?
I think it's first of all copper, because here supply-demand data, or let's say market balance, is much tighter than many market participants think. We are the opinion that especially supply is not as high as it used to be, and demand is also coming back, or also proves to be quite robust. Besides copper, we think that both lead and zinc show a relative attractive supply-demand balance and should gain in price.
Okay, we've run out of time, sadly, but Commodities Corner will be back on Thursday this week. Don't forget to check out all our other interviews today, of course, with experts from around the world by clicking back on the webpage. I'll see you tomorrow for another insight on the markets, but for now, goodbye.